episode 4 of the SJ podcast. I am joined by our writers Nate and Matt, as well as the Spartan Journal producer, Andrew Long. In today's episode, we'll quickly discuss the articles for this week's Spartan Journal newsletter and transition into a broad dialogue on the recent events of Bitcoin soaring past 50,000. We'll first cap off our conversation with Nate giving a brief introduction about his article, Banks versus Credit Unions, and who really deserves your money.
Thanks, Drake. This week, I dig into banks versus credit unions. Now, in terms of banks versus credit unions, a lot of people don't know the difference. When they look at a Chase and a MSU FCU, they see a same institution. But in all actuality, that's not the case. Banks are known for being owned by investors. And so banks look to make profits for those investors. Whereas credit unions, they're for the people. They're nonprofit businesses. So this week I dig a little bit into that and I discuss what bank or credit union would be best for you in discovering high interest rate loans or low interest rate loans for whatever you're trying to discover. So check that out this week on my article.
And then I wrote an article about Honest Co., which is a beauty and baby products company founded by Jessica Alba in 2012. And they're called Honest Co. because they started making products with natural and no like weird chemicals in their beauty products. And it's definitely, they actually tried to go public back in 2016, but they ended up kind of falling through with it because of some articles that came out from the New York Times. But they're trying to come back and do an initial public offering. They're actually valued at $2 billion, and they are definitely something that you should keep an eye on.
I just want to say, guys, thanks for having me on the podcast. You know, being in the background a little bit, I get to watch everybody's videos and I do a lot of the editing. I've never really took that background role, but now I finally get to see what it's like. So appreciate having me on, guys. So this week I wrote about one thing that I'm particularly interested in, which is Python and coding applications in finance. And for today's discussion about Bitcoin, it makes a lot of sense, like how important like coding is going to be important for the financial industry. So I go over sort of the background of it, how the growing data scale over the world is going to be exponentially growing, going from 45 zettabytes in the world data sphere to 175 zettabytes by 2025, which is kind of insane. So we're going to have to manage that much data by that point, and coding solves a lot of that. And one that's the most popular growing in the industry is Python. So a lot of schools, especially like MSU, are seeing a demand for Python, so they're teaching it a lot more commonly, but really anybody can learn Python, and there's a lot of free open source resources. So for anybody listening, if you're really interested in learning coding applications, especially for Python, I would definitely check out the article because I list out some really great resources that are free that you can check out and use to learn as you go. So if you want to learn more about Python, make sure to check out everybody's articles and the Spartan Journal podcast.
Yeah, thanks, Andrew. So in recent events, Bitcoin has soared past 50,000. But Elon Musk came out with a tweet earlier this week saying that it was way overpriced. So it dipped down 10%. And now it's trading around 52,000. But yeah, in recent events, Bitcoin it's almost doubled its market cap this year alone. So it's a big topic that we're talking about as of late. And so Nate wanted to talk about a bit about the inflation, how that affects Bitcoin and why that can be helpful.
Yeah, and before we dig into why Bitcoin, at least we have to talk about the problem that it presents, or at least the solution it presents to the problem that's going around in our economy, and that is inflation. Now, a lot of us know about inflation because our money isn't backed by anything. It's backed by no value, fiat money, right? It's worthless. And we've known that we've been off the gold standard since 1971. But in all actuality, we've not really been using gold consistently since 1914. And this is around World War I. Now, a lot of countries were trying to figure out how they were going to fund this war by either raising taxes or printing money. And option B allows them to do something where they don't have to hear a lot of nagging from their citizens, a lot of butthurt citizens coming at their necks about how they are making more money come out of their paycheck. So they started printing money. Fast forward to 1971, and we're officially taken off of the gold standard. But fast forward to the present day, 2021, and we're almost $28 trillion in debt. This is in part of us inflating the economy with fiat money. And we have to figure out some type of way to make our money worth some type of value. And that's where Bitcoin comes in. Now, we could say, okay, since we were previously backed by gold, why don't we just go back to the gold standard? Well, gold's heavy. Gold's heavy, and it's really, really, really hard to maintain and manage. It's hard to separate it into smaller portions, and it's costly to protect. But that doesn't necessarily mean we're doomed. Bitcoin, on the other hand, has a lot of the same qualities as gold. It's regarded as a currency that can be transactable between one nation to another. It's easy to protect, but most importantly, it's convenient. It's extremely convenient. And sometimes we hear the conversation of Bitcoin and hear that topic of conveniency, and it's on the negative end of the spectrum, talking about how we see a lot of black websites or websites on the dark web using Bitcoin to do illegal things. But at the end of the day, if Bitcoin can solve a major problem of ours, which is inflation, then we might have something on our hands.
That's really interesting that you bring that up, Nate, because there is sort of that perspective, similar to the gold standard, that there is a limited amount of Bitcoin. You know, I think currently, and correct me if I'm wrong, guys, there's about 21 million in circulation, but a lot of that is broken up into different pieces as people invest in it. And it's really all in the eye of the beholder. And Matt was talking previously as well that he's a bit of a skeptic, kind of similar to I am, because you know, one of the things you were talking about, Nate, is it's not backed by any government. You know, it doesn't go on the currency exchange. A lot of the countries can regulate their own currencies as they go through, and that's based on each country's independent inflation. And kind of similar to that too, Bitcoin has its own sort of inflation rate as it's going through, because not all that 21 million Bitcoin is in circulation, if people are unfamiliar with that. So Matt, what parts of Bitcoin are you skeptical about?
I'm skeptic about first, just the fact that it's super volatile. I mean, just we saw today, it went down by it was up from like 53,000 down to like 47,000. Now I think it's at like 50 something thousand, and it's just super volatile. Another reason why is it's super new. I mean, it's been maybe a decade and a half since it came out, and the guy who released it, Satoshi Nakamoto, no one really knows who he is. It's kind of just this random dude that just made this program, and then it ended up making a blockchain network and kind of bouncing off of everybody. So it's just, and a lot of investors are really thinking that there's a bubble that's forming. I mean, it's shooting up really high, and then it's kind of coming down, and people are really scared about that. So.
Right, Matt, going off that volatile aspect you're talking about, like we've seen in recent events, you know, Elon and Tesla buy like $1.5 billion worth of Bitcoin. And then he just goes on Twitter and says, hey, this is way overpriced, and then it dips 10%. It is very volatile just because it's part of that new wave per se. And new buyers, new sellers all the time. So when you have that fluctuation of people buying and selling all the time, it's going to be so volatile like that. And since it's driven by social media hype most of the time, that can play a big role in what retail investors are doing with their money.
And from a historical perspective too, with a lot of companies, you can see it like annual trends and sort of that concept of it, but seeing it spike as high as it has been kind of speaks to how volatile it is and how short of a time frame is, and kind of the unfamiliarity with these cryptocurrencies, but the amount of potential that comes with that as well. And it kind of brings to like what kind of asset class is even these cryptocurrencies, and is that going to develop into its own asset class for institutional purposes? Because you see a lot of like brokerage firms these days are providing that opportunity for like investors to buy and sell Bitcoin through a brokerage, which is pretty new.
Right. They
Yeah,
actually just released a new ETF this week in Canada. It was traded on the Toronto Exchange. So it's the first Bitcoin to receive regulatory approval in North America. And it's already demonstrated a lot of its market appetite for such a product. So the Purpose Bitcoin ETF, and the ticker symbol is BTCC, was brought by
Thank you for
Purpose
that.
Investments earlier this week and traded 80 million worth of shares in the first hour and 200 million in the first day. And that's a figure that's 10 times greater than the average ETF. And in the second day, traded 350 million shares, which was 3 times more than any other ETF. And while BTC Bitcoin ETF in North America, it's definitely not the last. Ontario regulators approved a second Bitcoin ETF from Evolve Funds Group this week. And Bitcoin custodian NYDIG recently submitted a regulatory approval filing to offer a similar Bitcoin ETF product in the United States. All these Bitcoin ETFs coming to life.
So if I might ask a question to the group, kind of going around a little round robin question, are you going to invest in Bitcoin? Have you invested Bitcoin? And from a long-term perspective, at any point in time, are you going to be investing in cryptocurrencies, or do you just need to know more?
Yeah, I've invested in Bitcoin. I was able to invest in Bitcoin like around 4,000, and it was just a small portion of money, but it was a matter of me staying in for just the potential I had in the future. And I wouldn't even call it investing really, because there are some faulty things with it regarding its regulation. Other countries saying that they want nothing to do with it. And so from that perspective, it's just like, all right, you might have a risky investment or a risky asset on your hands. But at the end of the day, this is something we've never seen. It solves so many problems, and it presents an opportunity to provide so much value for the world, that just to have a small portion of my total amount of money that I'm investing into it, it's not going to harm me that much. I mean, this is something that could potentially change the world if it were to be accepted, if they were to find some way to regulate it and make it widely acceptable in the U.S. market, and maybe not even just the U.S. market. Maybe it's worldwide. Like, this is something that the U.S. isn't really picking up on, because, of course, like we all know, the U.S. likes to have control, and Bitcoin isn't able to, or the U.S. isn't able to control Bitcoin at this point in time. But maybe a developing country has the opportunity to invest some of their cash reserves into Bitcoin, to where they're able to grow those cash reserves into something they've never seen before, and be like, I forgot what the firm was, but this firm put their cash reserves into Bitcoin, and it like almost like 3x'd. And so now they're sitting on a bunch of Bitcoin, because they chose the risky option to put a bunch of their reserves into Bitcoin. And now they're they're being seen as a holder of Bitcoin, and they can loan out Bitcoin whenever they want. A developing country can do that as well. Like, they can take that risk and be like, hey, we're going to do this, so we could potentially sit in on all this return that we could possibly see. Like, I was reading some of the statistics about Bitcoin's return in the last 10 years, period. The last 10 years, the S&P 500 has had a return on investment of 194%, right? Gold, 30%. Bitcoin, 6,230,082%. Like, that's astronomical. Of course, we're not going to see those same returns at this point in time because it's so high. But I was listening to a podcast, and it was telling me that, or it was telling the listeners that if Bitcoin is able to be seen as the hedge to inflation, as like a gold, similar to gold, it has the potential to reach 400,000 of valuation. And this is a so-called expert within the field, but a lot of people are saying this when looking at the valuations and the numbers of Bitcoin, all based on the problem that it solves. So at the end of the day, I have a small portion of my investments in Bitcoin, but it's just for what I see that it could potentially bring in the future.
Do these recent events of these ETFs change your mind of how you're going to invest in crypto? Do you see it as, I see Bitcoin as such a volatile like product that it's good to invest in, hundreds of different cryptos if you're really wanting to get in for long-term investment. Just because the volatility is like unlike any other thing we've ever seen. So this Bitcoin ETF has over like hundreds of cryptos in its security. So do you think that that's better for long-term investments, or are we riding Bitcoin all the way?
Yeah,
From what I've heard is the investment into Bitcoin itself is the best way to go at this point in time, mainly because Bitcoin has a fixed amount of its supply out there, and it's not controlled by any other entity. I think like Ethereum, they had somebody who had like put out a fixed amount, but he has like 10% of the stake of what's put out there, and so there's no control per se like Ethereum or any of these other coins. And then also it's like just it's out there like an asset similar to gold. Like they're not marketing Bitcoin. Brokers and brokerage apps are looking to market Bitcoin itself, but nobody's really putting Bitcoin out there like that. So I just see it as a gold like currency that has the potential to solve some of the problems that we're looking for, whereas some of these other crypto assets aren't doing that.
Yeah, have you guys seen that the stories about Elon potentially mining for gold like in the atmosphere, which could, if we find endless amounts of gold in the atmosphere, that'll drive the price of gold down so much where we won't be able to use the gold standard anymore. So
yeah, exactly. I kind of going back a little while back, Nate, you were talking a lot about governments and governments using Bitcoin to an extent of diversification. I think that's a really interesting point. And kind of my perspective on cryptocurrency is it's another outlet for diversification, not necessarily Bitcoin. I don't think I know enough about Bitcoin right now, and with how high it is and the volatility, I could invest in it. But I think the potential of cryptocurrencies is going to revolutionize and change a lot of the things that we know right now. That's why I would, Jacob, invest more into the ETF side of it. Nate, kind of going back to what you're saying about governments, could you guys imagine or picture a system regulated by governments where there's a national cryptocurrency or sort of a nationally mandated cryptocurrency associated with each country, kind of similar to the currency system we have now with exchange rates?
I think that would be pretty useful. I know like the ex-Fed chair Yellen, she actually was like advocating for that. She was like, yo, I really want to have like cryptocurrencies, and I feel like if it was government regulated, then I feel like it would actually be less volatile, and also just be it would people would feel a lot more secure about investing into it. And I think either they would have to do like an international currency. I mean, Bitcoin's kind of like that right now, or they would just do like Andrew was saying, where each country has their own cryptocurrency, and it's kind of just like putting all money online. Because I mean, I think like 95% of all of currency, even regardless, is online. It's just numbers on a screen. So we're already pretty much all digitally trading and stuff. It's just kind of moving to that crypto side of it.
doesn't that take away a little bit from like the decentralization of crypto? It's not backed by a government, by the government. So there's no regulations or anything regarding exchanges for Bitcoin. So like right now for international trading, Bitcoin is great because it's great over international borders. You don't have to deal with any other country's regulations for that aspect. But that's what I believe the one of the greatest pros to Bitcoin is it's decentralized, not backed by a government. But what if it was accepted by a government? The government had no share in it, right? They didn't have any, like, they weren't backed by it or anything, but then they just accepted it for currency.
Does the government currently have like Bitcoin in their reserves? Like, I know they obviously have gold reserves, like in Fort Knox, but like, has the U.S. government bought in Bitcoin?
I'm not sure about that.
Yeah, I doubt it.
Yeah.
I second what you say regarding the point of its centralized purpose. It makes sense that if we were able to have something that had a fixed amount of supply that was regulated by the United States, that we bring that on. But there isn't anything like that. And in terms of creating our own crypto asset, I mean, at the end of the day, what's the most valuable out of this whole crypto talk is blockchain and the value and resources that blockchain provides. But in terms of a crypto asset, again, we have to create our own supply of whatever currency we decide to use. And again, that kind of goes against the whole point of what Bitcoin solves. Like, we printed money in the beginning to say, hey, we're only going to print this amount, and we're going to make sure we pay it back, or we make sure that we keep the value of the money that we've printed at what it was supposed to be. But time in and time out, history has shown us that when we have that freedom to be able to print money, we decide to print more of it and make more of the money that we have currently in supply. We put more money in supply. And I feel like that'll be the same thing with the crypto asset. We say we'll have a fixed amount of supply at one point, but then the next point we'll have more of it. And then another point in time, we'll have more and more and more, to where we can't really trust ourselves.
Yeah, I agree with that, Nate. And especially from like a free market perspective, I think a lot of free market governments are going to get into the Bitcoin as well, and would be kind of speaking to what Jake was doing of accepting it as a form of currency. I was just saying, since there's so many different types of cryptocurrency, I could see a potential development of each government developing their own cryptocurrency within their regulated system, so that they could have some sort of form of regulation in cryptocurrency. But that doesn't change the fact that there's a lot of open blockchains for, independent ones like Bitcoin and even like Dogecoin,
Right. A bunch of those algorithms for the smaller cryptos aren't that strong. So you need something with the great algorithm that can't really be manipulated like a Dogecoin would.
Yeah.
Because Dogecoin, it's not backed by anything, right? It was started 10 years ago, and it just recently caught on hype. So
it's kind of funny, honestly.
Yeah. Did you guys watch that Dogecoin skyrocket the other day?
No, I didn't see that. Where's it?
Yeah,
at?
it was like hundreds of thousands. I think it was a couple 100% at least. Like that was like when it was the GameStop, AMC retail investor.
Can somebody tell me what all the hype is about Dogecoin? Like, I've heard everybody talk about it, but I haven't taken the time to do research.
So what I would say is once again, it's following that sort of market trend. There's a very buy and hold mentality going on with a lot of retail investors and a lot of young people, Reddit threads, that type of thing, hold to the moon type deal. And that's another part of what's the sort of the speculative aspect, or like that really kind of challenges the mentality that I've been taught and learned about investing. And I kind of wanted to ask Matt about this in perspective and kind of maybe go around a little bit more. What is your guys' perspective on the current, retail buying market? These guys are hold skyrocket to the moon, hold, don't sell kind of mentality.
I mean, I think that the good thing about Bitcoin is that bare minimum, it's getting and I know we talked about this before with GameStop. At least it's getting people into the market. At least it's getting people to put their money into something besides the bank. I mean, regardless, even if just as Nate just said, he made what 1,300%. Like, that is ridiculous. And like, people don't realize that, aren't in finance or aren't in accounting. They don't realize that putting your money into not just the bank will gain you money regardless. And I think that's like the positive of this. So I don't know. I feel like I'm kind of changing my opinion a little bit as we've gone on here. So I might invest in the ETF. I mean, I feel like that's probably the safest option. I've always kind of gone with ETFs as like a pretty safe option. So what do you guys think?
Just seconding that, like you said, it's a part of the educational process. Just falling on your butt, bruising yourself, and getting up and learning from the mistake that just was made, right? And this is what's happening. People are learning how to invest with methods that aren't tested, that haven't been proved to work year in and year out. And through practicing these faulty methods, they eventually will learn and will see that, hey, this isn't working. And if they're smart enough, they'll decide to change up how they're going to move with investing into the stock market or investing into crypto assets. And from that point in time, then they'll make the correct decisions on how to invest and where to put their money and how to allocate their money the right amount, or they'll just trust somebody fully, like a financial planner, to be able to manage those funds for them. But falling on your butt is a part of the learning curve most times. And to be able to get up and not repeat those same mistakes is what leads people to become more successful rather than not. And so I feel like this is a great opportunity for people to learn, because a lot of people are failing. It's just a matter of not looking at the failure as a failure, but more as a learning opportunity.
That's a great point. And then when they mess up, they can go take a look at your articles, Nate, and then learn a thing or two.
There you go. There you go.
Jacob, what are you thinking?
Yeah, so I pulled up an article from the New York Post regarding Dogecoin. So Nate had a question about, what was the hype driven by Dogecoin. And this is an article from today that was published about an hour ago. And so Elon Musk tweeted yesterday, a 3-word Twitter post about Dogecoin from Elon Musk has sparked speculation about whether Tesla's experimental supercomputer could help the meme-inspired cryptocurrency. Crypto enthusiasts on Reddit's Dogecoin-focused forum started connecting the dots after Musk's cryptic Sunday afternoon tweet, which simply said, "Dojo for Doge." Redditors suggested that he was referring to the powerful Dojo computer Tesla is building to train its artificial intelligence networks. Musk has indicated that the first version of Dojo, which takes its name from the martial arts school, would be ready towards the end of this year. And Musk did not elaborate on what his tweet meant, but nevertheless caused a brief spike in Dogecoin on Sunday before the price tanked Monday morning. And the coin was recently trading around 5.2 cents. So like I was saying, it's just retail driven. It's these retail investors that love Elon Musk and all these tech guys that are buying into the Dogecoin.
This man, Elon Musk, is having a field day, field year, man. Just off of a tweet alone, he can send a person who has $1,000 in their brokerage account into $10,000. And then people just swarm to that energy. And next thing you know, it's a whole movement behind the guy.
You know what I think it is? I think it's the technology he's implanting in us. He's putting stuff in the water again. By the way, for everyone listening, that is a joke. This is not, I don't believe that. I'm just making a point. Elon Musk, man, the amount of sway a single person can change the perspective or the movement of a massive population. So it just speaks a lot to the power he kind of holds.
But Elon Musk is he's just a meme. He's just a big meme.
kind of.
Who happens to be the richest man in the world?
Yeah.
Exactly. And it's crazy to see that. Of course, we're talking about all this craziness going on with the markets and how so much is changing with technology and how we potentially might invest. But just think about where we might be in 10 years. Like all the speculation that we're doing now could all come to a cease regarding these particular assets or these particular methods of investing. And then think about how better off we might be in the future. Like just having that mindset of the future, just to think like that, what if, like what could potentially be and how we might have easier lives doing it, just blows my mind. And it makes me extremely eager to get that started.
And it's exciting too, because that interest and that optimism and that perspective of what you think is going to be in the future is something that you can invest in on your own. So in 10 years from now, we might all get back together and do oh man, I wish I did this. Or I wish I did this, but we talked about doing this and now look at us. So I think that's a fantastic, optimistic perspective to have, Nate.
A 10-year reunion of the Spartan Journal Podcast.
That sounds good to me.
It's on the calendar. It's on the calendar.
Hey, I'm RSVP'd right now. I'll be there. But I wanted to talk a little bit more about how once the ETFs come to America, because the equity market in Canada is just 8% of the size of the US. And it's less than like the ETF Nate was talking about last week, Spider. So they trade way less than that. So Canada has been long in respect to ETF product development, from listing the first ever ETF in 1990 to more recently becoming the first ever psychedelic ETF. So that's a new thing. And I was looking at a couple of other, monumental things that Canada has done in the ETF market. So they had the first ETF drop in 1990, which was the Toronto 35 Index Participation Fund. And they also had the first ever fixed income ETF in 2000, first marijuana ETF in 2017, the first SPAC ETF in 2020, and the first psychedelic ETF and Bitcoin 2021. So they are way ahead of the curve when it comes to, development in ETFs right now. So once America develops those ETFs and puts it into our market, they're going to grow even higher than what they did in Canada. So I'm just very excited. There's a lot of regulators out there that still need to approve these, but within the next year, they will be all over and they will be the new wave. Trust me, I'm telling you right now, Bitcoin or crypto ETFs?
Yeah,
Look it
I
up.
from an American perspective, kind of talking about like what's stopping America. I found some main arguments given by the SEC for the sort of rejection so far, maybe the lack of acceptance. So I think that the SEC definitely hasn't hopped on it, mainly because of its volatility, and there's a lack of sufficient surveillance to kind of see like what it can do and if it should be in the market as an ETF. And the other thing that they're a little bit worried about is how easily manipulated it can be, because there are cryptocurrencies that are easily manipulated and that we've seen. So I think it really just takes time kind of going forward with that. But yeah, they have an entire white paper kind of going over the entire discussion of what the SEC's perspective is on these Bitcoin or cryptocurrency ETFs.
Well, it's not even just that. I mean, cryptocurrency from the beginning, from the get-go, is associated with like illicit trading. And we talked about earlier about the government does actually have cryptocurrency in its possession, but it's only because it was seized because of illegal trading, because they were trying to trade drugs or stuff on the black web. And I think that's why it's kind of a little skeptical from the US. And maybe as US companies are starting to invest in it more, I mean, PayPal, MasterCard, Tesla, I think that'll definitely kind of ease them into accepting it more and kind of being more comfortable with it.
Great point, Matt.
So what would help mitigate the volatility of the Bitcoin? What needs to happen for governments to approve these regulations?
Well, kind of like what Matt was saying, is that they're not going to apply this to our broad spectrum market until they feel that it's safe enough, or they might have a step in to regulate it, or make sure that if there's an overwhelming organization that they can, or if they regulate an organization that takes care of managing Bitcoin and its security. Because if someone is able to manipulate prices or manipulate the system, then it was all for nothing pretty much, because then that's not free market. That's not consumer sentiment. It's just kind of stuck where it is.
If you enjoyed the discussion, please like and share the podcast on Apple and Spotify. The Spartan Journal Podcast is part of Michigan State University's Wealth Management Association, a student organization whose goal is to inspire the next generation of financial advisors. The Spartan Journal news team releases a newsletter every Monday morning comprised of financial literacy and the week's market updates. Feel free to follow us on social media at msuwma and check out our website at msuwma.com.
Anything heard on the MSU WMA podcast is for educational purposes only and should not be considered as investment advice.